Hello everybody and welcome to the weekend video and welcome back to the worst produced video on the internet. So I hope you enjoy it. I'm going to, again, for newcomers, I'm just going to run through the 6 markets. I'm going to go 4-hour chart down to the short-term chart and just kind of orientate ourselves for what's happened this week and what is likely or possible to happen next week. Okay. We're on Eurodollar. We're starting on Eurodollar this week, and I'm just after a thought has just popped into my head there regarding the structure here of Eurodollar and how, let's say, how similar it is to a certain stock market that is currently correcting higher. That stock market being the Dow. I just want to take note of the high here in Eurodollar and the steep decline off that high, and then a clear 3-wave pattern, and then another steep decline, and then another 3-wave pattern. Now, back when we were stuck in that topping structure there, we were stuck in that topping pattern, and the price tended to just go nowhere for months on end. We would all be forgiven for thinking that this was just a kind of a lay-by in a larger uptrend, that this was just going to be a short disruption, and the continuation to higher prices was imminent, because the price was not plunging; it was just hanging around, at in a quite a narrow range, really, for you could say 25th of January until almost the 20th of April. So you're talking 3 months of going absolutely nowhere, and then all of a sudden, out of nowhere, came a massive plunge. And now off the high, we're down 1,000. Well, into the low, we were down 1,000 points off the high. So it does kind of bring into mind what's happening in the Dow right now, and we've got this seemingly innocuous correction, and we have got a tightening range, and we have a price that seems to be going nowhere in general. If you zoom out and view the kind of topping process that's happening, it is reminiscent of what did happen earlier on this year in Eurodollar. So, seen as the pattern in the Dow is not dissimilar to what happened in this particular Eurodollar top. It is something to keep in mind for what could happen, once, if and when an acceleration downwards does begin. So the declines tend to happen quite quickly, and they can overcome large obstacles that we seem to have in our heads, So anyway, back to the market that I'm actually looking at. So this is the Eurodollar 4-hour chart. As you can see, I've marked an alternate account here, which is circled in red, and I'm not. I'm definitely not against this alternate account here, which views the current correction at one lower degree than the one currently shown. So this would suggest, if it's the alternate account, this would suggest that there's far more downside to come before this particular wave 1 in blue is complete. Currently, we're looking at a 3-wave correction higher, completing. Interestingly enough, we didn't even break the 200-period moving average. We just tucked in underneath it and then declined quite rapidly off that over the last couple of days. So we're looking at a possibility of a completed wave 4. So we have 1, 2, 3, 4, and a further wave 5 to come. I think well, at a minimum, we should break the low 115. So what was the low there? 115.09 or 10, whatever it was. At a minimum, we should break that low, and quite possibly we could get into the 112s or the low 112s even before this is finished. Before this wave 1 down is finished. Okay, let's go to the short-term chart. As you can see there, 3 waves up. There's a couple of ways you can view that. This internal mess in here. You could see 3 waves as complete, or this B wave, sorry, complete at that low here, that 3-wave low. Or you could call this this whole sideways correction a running flat. So you could go 3 waves into A, 3 waves up into B, and you could go with 3 waves down into a C. So that would be a complex running flat. So each internal move would have 3 waves. So anyway, I'm going to stick with the current pattern. That's kind of like a splitting hairs, really. It's a distinction without a difference. Suffice to say, we were looking for a further high into about 118.40. We got that. We got a decline, and so far we could be looking at developing 5 waves down. Yet to be kind of confirmed. You'd be expecting that on Monday. If we don't break the previous interim low here, which was, let me see, 117.90, we could call that. If we don't break up above that wave 1 low here, then we could call, sorry, and we see further declines in a 5th wave, then we could call this a 5 waves down in wave 1, possibly in pink here. In general, next week, early next week, we're looking for kind of a confirmation that wave 4 is complete. So we're looking for 5 waves down, 3 waves up to a lower high, and then that would be a complete Elliott wave signal. So we'd probably expect that, if it's to happen, we'd expect that by Tuesday evening, I reckon. Okay, so that's what we should look out for early next week. And once we have that signal in place, then that would probably provide a decent opportunity to go short on this market. The only other possibility to keep in mind is if we are developing a larger wave 4 in green here. So it's always possible that this 4th wave will develop into a triangle. So we should know by the end of next week whether that's feasible or not. Okay, let's get to pound dollar. So again, we have a 1-2 pattern possibly complete. I'm saying possibly because we haven't got any further declines off any impulsive declines off the high just yet. We've got 5 waves down completed in wave 1, possible 3 waves up in wave 2. Again, we don't know whether this wave 2 will develop even further into a more complex pattern, but that should be revealed next week, as with Eurodollar. Let's get down to the short-term chart. This is the half-hour chart. Let's go out to the hourly chart. So this is the hourly chart. This is our 5th wave low here in wave 1. We were looking for that to complete. We got the completion, and we've got a nice corrective looking rise off that low. So far it's filling out that trend channel nicely, and we seem to have a 3-wave pattern up complete. And off the highs, then we've got these kind of stabs to the low into declines. As yet, as I wrote in this evening's update, this this move today is very overlapping, so it's hard to, and most of it was retraced as well, so it's very hard to view that as an impulse wave or a developing impulse wave. So it's probably part of a larger wave 2 in pink here. So we may have a 3-wave, either running flat or expanded flat, happening in wave 2 here. I would like to see, I would prefer a running flat on that one, because it would it would keep the price shy of the recent high there. That would be 134.71. So We don't want to see a break of 134.71 on the early trade next week. We want to see completion of a possible running flat and then further declines into a third wave. If we get a break of that high there, 134.71. If we get a break of that again, it will lead us to believe that wave 2 here is developing into a larger structure. So at the moment, we kind of have to take this with a pinch of salt. We need further confirmation to see if a third wave down is beginning. I'd like to wait for a larger, excuse me, a larger 5-wave pattern down to give us indication of a shift again to the downside in wave 3 green. So if you look at the 4-hour chart again, we only have wave 1 and wave 2 complete, and wave 3 green is projected to a minimum of 122.50. So we're talking about 1,200 points there. So we're willing to wait for a larger lower high to develop here to give an entry, to give yourselves at least a how would you phrase this? A more fitting or a larger hint in the direction of the trend. So we'll wait on this one. I think this is a kind of hands-off for the moment, just to see how the price develops off the recent high there in wave 2. Okay, so let's got to. Okay, so here's dollar yen. This is the 4-hour chart, and what we're looking at is 5 waves up in wave 1 in gray, and a possible 3 waves down complete in wave 2. The movement off the pattern off the low in wave 2 is pretty damn impulsive. So we're all but confirmed that the move off the low is the beginning of wave 3 to the upside, and wave 3 to the upside should be quite a powerful move. If we're looking at wave 1, we get a Fibonacci extension off wave 1. We're looking at a minimum of 115 for wave 3, but you would expect wave 3 to push up to the 161.8% extension, so it could be 119. So the early target's between 115 and 119. So I'd be targeting the upper one there, really, myself, just because I'm an optimist. Okay, so let's get down into the 30-minute chart. So the pattern off the low here is a pretty decent 5-wave pattern to the upside, and it continued beyond expectations, which was good. We got a clear break of the previous wave, internal wave B there, which gave us the first indication that the price is most likely turning higher again at a larger degree. Excuse me. So off the recent high there at 110.26, we seem to have a pretty clear 5-wave pattern down. It's possible that that today's action, which seemed to kind of contract further and further, it's possible that this is a contracting triangle within this wave C here. So we could be talking about 1, 2, 3, and maybe a contracting triangle wave 4 with one further test of support there to complete wave C. We should know early the Sunday night trade, the overnight trade on Monday morning. We should know how this will play out. Again, the 50% retracement level is going to offer support either way. So 109, the low 109s would be the target, even if wave C was to develop down a bit further. But for the early trade next week, we want to see a completion of that wave 2 and the first initial moves up in a possible wave 3. So that's next week. In general, it should be a turn in favor of the US dollar across the board. I think these corrections are pretty damn complete now at this stage. So let's move into the star of the moment. Like I was talking about with Eurodollar, the movement of the recent extreme high. I'm still viewing it as 5 waves down, 3 waves up, 5 waves down, 3 waves up. So a series of 1-2 waves to the downside. The excessive bullishness that now appears, I think, is even more extreme than the high, the all-time high there back at 26,600. So we're 1,300 points off the high, and we've got a more bullish market than we even saw back then. So it would suggest, or it indicates to me, the kind of capitulation point of bullishness, really. You tend to have at lower highs, after a correction or after initial move down off a high, you tend to have even more bullish people or investors at lower highs, because they tend to think that the danger is past, and now that they can continue, with the previous trend, and all you have to do is buy, basically. I think this is exhausted now at the moment, because you can see here on the 4-hour chart we've got extreme highs again that are matching this previous wave 2 here. We've got a reading on MACD that's matching those previous wave 2s, even with a higher, if you can see there, the high registered in RSI is actually higher than the previous wave 2 here, and it's actually higher than the registered high at the all-time high. So we've got extremes in momentum at lower highs. We've got initial moves down off those extremes in off those extremes in momentum and extremes in price, and we've got a decent hint that we've got a bearish Elliott wave signal at 2 degrees in the larger term chart. It's time now for some confirmation moves on this on this front. Key resistance for the short, or the 4-hour chart here, is 25,847, and that would be the previous wave 2 here, and that still, even if the price breaks that, it obviously adds credence to the idea that's going around that this is actually a contracting triangle wave 4. I'm not with that, at least not yet anyway. I'm still pretty hard bearish at the moment. Is there anything else I can say about this 4-hour chart? No, I think I've probably gone on long enough. Okay, this is the hourly chart here. We have the price kind of hanging around the upper trend line here of the trend channel. This evening, I'm not sure, did we match yesterday's highs, or did we pip a new high? I think we may well have just pipped a new high at the close. I'm not sure. But however way you split this final move up, it reads in 5 waves in two particular readings, or in 2 ways of looking at it. You could say that this is wave 1, 2, and wave 3 at yesterday's high, wave 4, and a new wave 5 at today's high. Or previously, you could say that the internal correction here was wave 4, and wave 5 reads a 5-wave pattern also. So I think the upside here is rather limited at this stage. We've got 5-wave patterns here, a 5-wave pattern up in grey. We've got a which completes a 3-wave pattern in wave C, which completes a 3-wave pattern, which completes a 3-wave pattern in wave 2. And 3 waves suggests a correction higher either way. So I think we're at the end of the upper possibilities, or the upper threshold of this final move up here in wave C. And I think early next week we should see the fruits of this bullishness pay dividends with initial moves down. Obviously, support here at the previous wave 4 is the kind of the first area of interest of 24,249. So that's a good 1,000 points below us anyway. So we're going to see, hopefully next week, we should see initial impulse waves to the downside in the developing larger wave 3 blue. So watch this space, I suppose. Okay, so the gold market is stuck in a rut at the moment. I mentioned the other evening that the sideways pattern here could potentially be viewed as a lower degree fourth wave within this C wave here. So we have a off the wave 1 high, we have A, B, and C. The movement off the low can definitely, I haven't discounted the bullish interpretation yet, but if we do get a break of previous lows there, which were 1288 around the 12, if we get breaks into below 1290 again, or a break of 1290 again, then we could probably be pretty sure that this is a contracting triangle in a larger degree C wave down. So let's get to the short-term chart here. Excuse me, I'm going to take a drink. Now, like I said, I haven't discounted the bullish interpretation either, but it's good to remain aware of the possibilities here. So we see a possible contracting range, and like I said, if we get a break of definitely if we get a break of 1287, then we could probably that would probably trigger this this wave 4 would move into triangle position, and we could expect one more low in wave 5. Either way, the long-term trend is this correction in wave 2 is completing no matter what way it slices, and the long-term trend will be to the upside beginning soon. Let's get rid of those trend lines for the moment. On the positive side, the leading diagonal theory in wave 1 has played out, and wave 2 was an expanded flat into today's low, and we've got a nice spike off that low again. So we're still looking at 1307. On Monday, if we get a break of 1307, then we can stick to our guns on the bullish count. All right, let's go to the final market, which is crude. So crude oil stands at a pretty interesting juncture right now, because we could have a 1-2-1-2 pattern complete to the downside. We've got a nice solid break of previous interim swings, or swing high here in wave 1, then that swing low there in wave 4. So we've got a clear break of that that kind of support shoulder there. That was the previous wave 3 also as well. So that was a pretty important level to break, that 66.50 level. And we've got a nice impulse move to the downside below that, and we've got a 3-wave move which has yet to see any higher than 66.50. So, like I said, on the 4-hour chart, we possibly have 1-2 and maybe a 1-2 pattern complete. So we could be within the thick of wave 3 right now, and if wave 3 plays out like a normal wave 3 should, then we should see accelerations lower in wave by the middle of next week anyway, in wave 3. The next level of importance is the previous wave 2 and wave 4. They're clustered quite nicely together between 61.70 and 60.10. So we've got this 160 point kind of cushion there, that if the price does break down through that, well, then I think we could pretty much confirm the longer term downtrend in play. And the longer term downtrend is with kind of tentative targets at around the $20 level again. Okay, so that's the 4-hour chart. Let's get to the hourly chart. So here's the hourly chart. That's the previous recent high there in wave 4 in red. So we've got a nice 5-wave move down in wave 1, 3-wave correction in wave 2, 5 waves down again in wave 1, 3 waves up in wave 2. I changed that to a larger degree wave 2 this evening because there was a decent discrepancy between the size of wave 2 here in pink and this sideways pattern, this this corrective 3-wave pattern in which I had previously called wave 4 pink. So I'm shifting to the idea that this is a larger wave 2 in brackets here. We've got a nice 3 waves up. We've got a test of the previous high there today and a sharp move down off that high. So again, if we get down to the 30-minute chart, we might clear that up a little bit. No, not very much at all. It does look pretty impulsive, the move off the high. So we could have the beginning of wave 1 here. That could be wave 1 of 1 to the downside. So if early next week we really were looking for a completion of, it may even take the whole week of 5 waves down, 3 waves up to a lower high below this resistance level here. This 66.16 I think was today's high. 5 waves down, 3 waves up. If we get that completing next week, then we are on for an acceleration lower over the rest of June anyway. So early next week, we want to see this wave 2 high here hold, and we want to see 5 waves down again. Okay, so that does 6 markets. Hope you found that interesting, and I hope it didn't put you to sleep. I wish you all a great weekend, and until Monday again, Godspeed, guys.